Alright, sorry about that. My recording got interrupted for no reason. But anyway, my previous three intraday position, unfortunately, I exited everything. I was in CAD yen for 4 hours, and when you cross this 25 EMA, I don't like to hold it any longer. But as you can see, CAD yen, if you do this kind of intraday trade, you could really ride on a pretty nice trend. My other trade is pound yen and euro pound. I exit both. Pound yen I exit with early exit when it crossed and closed in opposite side of 25 EMA. I also got out of euro pound. This one got stop out actually. So also early stop out because of the again crossover. So of course the general direction for British pound, of course, it might still be strong enough, but for me, I don't see a clear trend right now, especially in these last 2 weeks. So I'm not interested in taking a British pound trade. Personally, right now I'm in $2 trade. I'm in dollar Swiss, still riding a trend whenever we have a nice trending up. I'm also in euro dollar short, and again, like I say, it might go against me. It might going nowhere. It might be a trendless market. That's why reduce your position size is very, very important. So that's what I'm looking at, and I'm still looking to buy dollar yen. I'm still looking to buy Aussie yen, Aussie Swiss, things like that. But if you have a risk events like later on, then maybe you wait. But if you think intraday trade riding a trend, then you could still ride a trend. It's either gonna help you or hurt you. That's basically what happens when you trade into risk events. So different strategy for different thing. And let's take a look at our economic calendar for this week, just to see if we have anything that's tradable. So again, today already passed. It's not really a tradable event. Later on, the policy rate you could trade if the interest rate is cut again, which is highly unlikely, but you never know. Of course, it's cut again, you can buy dollar yen right away. Other than that, I don't really find anything tradable for today. Tuesday, your GDP price index will be good to trade New Zealand dollar. Now, when I trade risk events, I tend to like to trade with the strength. That means if the GDP price it's a large negativities, I'm not going to short New Zealand dollar. I'm only looking to buy New Zealand dollar when I have a positive surprise. So it's really congruent with my predetermined point of view for a particular currency. So depending on what happened to Japan, Bank of Japan, then New Zealand dollar, I'm looking to buy. I might buy with New Zealand yen, New Zealand Swiss, or short Euro New Zealand. What's the number I'm looking at? Really, there's no forecast number in here. So what you're looking at is just look at the previous number and just sort of look at, the largest number was 11.4. So of course, if you see anything above 11, that will be a very good strength to buy into New Zealand dollar again. And of course, if you see anything, 3-4%, that's quite neutral. You could still buy it. But personally, I just like to grab that momentum. So I do like to wait for a really, really positive surprise to buy into New Zealand dollar. On Wednesday, crude oil inventory, not really tradable for me, but you could take a look at what's going to happen. Whether it's a draw or build up, that's going to affect the oil market. GDT price, it's another good event to trade. Now, this one has the expectation number, so I can give you that. But just understand what happened to the GDT price again. It's not in the London session, so I tend not to trade it, especially we are 15 minutes close to 5 p.m., which is a lot of brokerage over time. It means at 5 p.m. a lot of brokerage sort of cool down the system. Okay, they have to switch the server, things like that. So it's really not the best timing to trade, but nevertheless, I can give you the number. So December 21st expectation, it's I'm looking at it at 0.8% production. GDP quarter to quarter. Cannot find it actually. Oh, right here. GDP quarter to quarter 0.9% expectation. If you have anything that's over 1.1%, that's a great surprise to buy. So if you have anything over 1.1, you can buy into New Zealand dollar. Again, depending on what happened today, you can either buy against Japanese yen, Swiss franc, or sell Euro New Zealand. I'm not looking to sell New Zealand dollars, so I'm not looking to sell at a surprise number. So I'm just looking to buy if we have anything above 1.1%. For those of you who wants to go against the strength, you want to sell New Zealand dollar, if you have a negative surprise, you could do that. If you have anything below 0.7, so 0.7% will be a negative deviation that you can sell New Zealand dollar. Thursday have core CPI, core retail data, CPI retail data from Canada. Now this is important, of course, for Canadian. As CPI is one of the main factors, so you could, of course, for me, I will buy into it, but that depends on what happened to the crude oil inventory. But generally speaking, I do like to go with the bigger picture. So I would like to buy when we have a positive surprise. So core CPI, we are expecting 0.2%. Actually, there's no expectation here. It's 0.2 is the last one. So we are actually, in my Reuters account, core inflation month to month expectation is actually minus 0.2%. So negative 0.2% is the expectation. If you have anything above 0.4, then that's a great indicator to buy. 0.4%. If you have anything below negative 0.5, that's a good indication to sell. In terms of core retail sale, expectation is 0.7%. If you have anything above 1%, that's a positive indicator to buy into Canadian. If you have anything below 0.2, that's a negative indicator to sell. Now, which one is more important? Now, the question is not which one is more important. The question is they have to be congruent. So you don't want a positive CPI with a negative retail or vice versa. So the first thing you want to look out is you want this 4 data to at least be in line or positive. If they're negative, you want to be very, very small negativity. So you want the 4 data to be in line. They are either all positive or negative. So if you have mixed data, I tend to not trade. So that's the first step. They have to both all be in positive territory. Then you want to look out for the core data, of course, because that's excluding the oil market and all that. So you want to look at the core data, and you want at least one of them to be a surprise. So that's tend to be my general principle. First, the data have to be incongruent. Second, you want the major data, the tier 1 data, one of them to be a positive surprise if you want to buy into the currency. If you want to sell the currency, you want one of them to be negative surprise. And then, of course, at the same time, you have final GDP, unemployment claim. Now, this is actually not a tradable event for me. And the only thing I'll do again is if you have a positive surprise, you can continue buying US dollar. If you have a negative surprise, that's not the reason for me to sell US dollar. So let me give you a number. So the core durable goods expectation is 0.2%. We are, if anything above 1%, that's positive surprise. If anything below minus 0.3%, that's negative surprise. Final GDP, we are expecting 3.3%. Anything above 3.5 is positive surprise. Anything below 3.1 is negative surprise. Finally, unemployment claim 255K is expectation. Anything above 265 is a positive surprise. Anything below 253 is a negative surprise. So again, I'm only looking to buy into US dollar. Now, I think I'm going to write down this on my report so that's more clear, if you want to follow up, do things like that. Friday, of course, nothing really important. The current account, the London station, not much to trade. And then finally, it's the GDP month to month for Canadian dollar. Again, that is a tradable event. I'm only looking to buy into it. GDP data 23. Just give me 1 second right here. 0% or 0.1% is expectation. If you have anything above 0.2, that's a positive surprise. If you have anything below minus 0.2, that's a negative surprise. So again, I'm only looking to buy into Canadian, but let's see what happened to the oil market up until Friday. So that's pretty much the tradable events for this week. It's later on the Bank of Japan policy rate, if there's a surprise, GDP data from New Zealand, if there's a surprise, the GDP number from New Zealand, of course, if there's a surprise, and the Canadian core CPI, core retail CPI, if there's a surprise, and the final GDP for US dollar, if there is a surprise. And then again, on Friday, you have GDP data from Canada, if there is a deviation, there's a surprise. That will be the only reason for me to trade. Usually, the risk events, I trade with at least 1% of risk capital. But again, this week, these 2 weeks, really just don't want to commit such a risk in these last 2 weeks. So I might just still using 0.2% for everything if I'm going to do anything at all. So that's my strategy for this week. As for now, I'm just still, again, just show you, I'm still looking at, buying US dollar, Australian dollar, New Zealand dollar, Canadian dollar. Still, this is my position. To long, my position to short with very small loss size. So that's pretty much it. Again, last 2 weeks, do not take too much risk. And really, psychologically, the only reason you take that much risk in the last 2 weeks is you're trying to make your loss back. You're trying to finish up the year with a better report. But as mentioned, it is fine to pretty much everything is done for the year. So it's fine. You got to look ahead. You got to be more positive, looking forward to know that next year is another new beginning. And if you are trading, you know that this is a game for life. This is really for a long-term prosperity, basically. So don't get stuck into this short-term psychological effect. Rather, take this time, maybe relax. If you have, doesn't matter if you make money or not, just take the time to relax and then, continue learning. And that's pretty much it. Oh, sorry, I forgot to do a daily one. Yeah, I still have to run through the daily analysis. Even though I don't trade any daily trade myself, but yeah, let me still do the daily analysis. So 20-year currency pair. Just give me 1 second. All right, so let's take a look at daily chart. Euro pound. So really, again, not much going on. You are in this sideways movement. Really nothing for me to, short or buy. Basically, Euro Swiss continue drop. It's just continue weakness into Euro. Just shows how weak Euro is in terms of compared to Swiss franc. Euro dollar continue to drop. Now people like to guessing how low is Euro dollar gonna go. Really nobody knows, because this is really a historical moment. And could Euro dollar go into the parity, which is 1-to-1? Possible, absolutely. Especially next year, you have these 2 major elections. You never know what's gonna happen. And so if next year we know quite for sure that US dollar is to continue gaining strength, but we don't know how weak the euro is going to go. So 1-on-1, yeah, it's possible. You never know. You're looking at the euro, is really have a very short history. You start using euro at 1999. That's like less than a century. It's just such a new currency. So then the whole currency market is just such a new thing in terms of a historical point of view. So anything can happen. I know a lot of time we do a back tasting, we feel like, it hasn't happened in the past 25 years, so it's probably not gonna happen. That's not the case. It's very, very new currency trading in comparison with, stock trading in terms of for the public. So anything can happen. Euro, people saying that 1.05 is the lowest low, or 1.03. I don't know. I don't like to make this kind of assumption. Fundamentally, it might keep going lower. Now Euro Aussie, same thing. You have a rebound. As actually you see a weakness into Australian dollar. This actually just gives me a more better spot to sell Euro Aussie. Same as Euro CAD. You have this sort of weak signal. Now again, I'm not looking to take any daily trade, so it's not something I would take. I would short it, but it is a good position. You have this red candle last week, it doesn't get filled. Another candle, what's gonna happen is you're pretty much going to be in this box area, up and down until you break downward. And when I say downward, just because euro is still weaker than Canadian dollar, but you are right now trying to approach 1.40, and then you fail. So yeah, it's a good sign that it's gonna go down at least to taste 1.38 or 1.3850. So yeah, it is a good downward signal. It's just personally I'm not looking to take daily trade. I might go to 4 hours to see if I have any opportunity. Euro New Zealand, same thing. It just when it goes up, it gives you actually a very better, a much better level to short euro dollar versus New Zealand dollar. And euro yen, another drop versus Japanese yen, and this might very well reverse or continue depending on what happened to later on the BOJ statement. Now, if you look at euro New Zealand and euro Aussie, you know that's what I'm talking about. Why is euro dollar gaining strength? There's really not much reason to talk about it. It might just be purely profit taking, and that's why I say the last 2 weeks sometimes it's hard to trade because it's not really following any fundamentals perspective. So that's why. Pound Swiss, not much movement for me. Same as a cable. You're still within this. Let me delete these middle lines. You're still within this range. Pound Aussie, you actually have a strength again into Australian dollar, into British pound versus Australian dollar. Pound CAD, Pound New Zealand, and again, we were short here last week. I got out, and I'm glad I got out because otherwise will be a nasty drawdown. But I don't know, lots of you who still in the trade, I hope you at least move, with 3-bar exit, at least you move your stop loss, then you get stop out with much smaller loss. But that's pretty much what happened to British pound, is that you have a strength and weakness coming to market. Every single day is different. That's why it's hard to trade. Pound yen, right now you can see that Japanese yen is actually gaining strength, which again, it's not going with the direction of the fundamental, but we will see what happened to the BOJ report. Dollar Swiss looks like it's going to keep going up. It's nice, hammer kangaroo tail. Again, I'm not looking to buy into daily trade, but I am in a 4-hour trade for Dollar Swiss. Dollar CAD does look like a very nice, solid, big shadow. It does look like it's gonna keep going up. Might be a good trade for you to take in the 4-hour area. I don't really like to take these two because they both are equally strong for me. Dollar yen, I'm really looking to really continue buying dollar yen, but we have to wait for the Bank of Japan report first. Now Aussie Swiss, again another drop in Australian dollar. Nothing really going on with Australian dollar. It's just there's two factors. First is the pressure from US dollar. Second is the risk of sentiment that in the stock market. And third is just that's just the nature of Australian dollar. People buying and selling it. And Aussie New Zealand continue going up. So New Zealand dollar is actually the weakest currency. One of the weakest currency. Aussie yen, large, big dropped. CAD Swiss, CAD yen. Just give me 1 second. CAD yen. You can see pretty much everything is going with the strength into Japanese yen. New Zealand dollar keep dropping lower. New Zealand CAD. and New Zealand yen. Another low day. Yep. So that's pretty much it. Again, not really looking to take anything, but you saw the few interesting things. EuroCAD does look like it's gonna go downward in terms of daily chart. Same as dollar Swiss, does look like it's gonna go up. I am in dollar Swiss 4-hour trade. EuroCAD, I'm looking to get into it if we have a good signal. I'm actually looking to continue shorting EuroCAD. Might not be bad to keep going into it. So that's pretty much my strategy for this week. I hope this video you find this video helpful. If you have any question or comment, feel free to let me know. Otherwise, I'll be back tomorrow with another daily analysis, and just watch out for the BOJ rate decision later on if you are in any Japanese yen trade. Okay, all right, see you guys. Thanks for watching. Take care. Bye bye.